Good morning and welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses across the UK. If you've got any questions throughout this show, then please make sure you ask them in the comments of the live feeds and we'll do our best to answer them. If you need any more advice, then please join the official Intuit QuickBooks SMB community group on Facebook. There's accountants and business experts such as myself on there 24/7, always answering questions, sharing advice, sharing knowledge, and lots of business owners learning from each other's own experience. During the live session, we are running a poll, so please do engage with that, and I'll reveal the results at the end. My name is Johann Goree, and I'm the Managing Director of the OnPoint Accounting Group. I represent several OnPoint accounting brands within the OnPoint Accounting Group, but the whole group's main mission in life is to support startups and small businesses across the UK to grow and develop into the economy of the future. So I wanted to talk to you today as the weather has turned, especially up here in Scotland, in Edinburgh, it's turned very autumnal. The media are already speculating we're going to have snow in the next couple of weeks in Scotland. We probably are on top of the mountains and hills, but we're probably not going to get any lower down. But it's the point at which I always start to think, right, how are our clients going to survive the winter? Especially in Scotland, there's a lot of tourism-based businesses. So there's a lot of businesses that normally go into kind of hibernation mode or semi-hibernation mode at this time of year because the tourism levels drop. I know a lot of cities are doing a lot of work to encourage another spike of tourism during October for the half terms and another one during December. But we certainly see last 2 weeks of October, first and then November is obviously a quieter time for tourism. And if it's a quieter time for tourism, it's a quieter time for a lot of our clients in the food and drink industry, etc. But what we're actually seeing is a lot of our clients are taking learnings from COVID-19 and being shut down and having reduced trading. And there's clients that are staying open just in a smaller capacity than normal, that normally close at this time of year. There's clients that are planning ahead because they've learned from COVID-19 that actually there's trade to be done in winter. There's opportunities out there, even with tourism dying down. So I just have a chat to you guys today about what I'm seeing, what our clients are achieving. One of my favorite things to do is to walk up and down the high street, grab a coffee, bacon roll, slice of cake, all three if I'm particularly lucky, chat to people, find out how their businesses are going, and just understand what's going on in the world. So, every business will have a different reaction to winter. I was chatting to a client last night, heating and plumbing engineer. He's hitting his peak time. Everyone's starting to turn on those gas boilers and they're not working. They're not firing up. They're losing pressure. So he's constantly busy from 7 a.m. till 10 p.m., 7 days a week. He's slammed. I'm talking to restaurants. I'm talking to bars, talking to coffee shops. The trade's dropping off a bit. Coffee shops are picking up a bit because they've got their winter specials coming out now, their autumnal coffees, etc. But there's definitely a mixed reaction out there. So there's a few points I just wanted to go through with you all and really emphasize the importance of them. And it's all about continuing to plan ahead and keep control of your spending. This is the first Christmas since COVID-19 and lockdowns. I appreciate COVID-19 is still very much a thing and it's there, but the hope is that lockdowns won't be enforced over this Christmas. And there's lots of mixed views. Some people are saying it's going to be a normal Christmas. Other people are saying, well, there'll be people spending more and they'll be doing more because they're making up for last Christmas. A lot of the workplaces I speak to are debating whether they're going to have a staff outing or if they're just going to get the staff vouchers or, a working lunch or something like that to encourage the team to go and do their own thing. Everyone's doing different things. So What it's going to look like, it's unknown, and it's the most unknown we've had for a winter period since well before COVID, because everyone kind of knew how winter worked. So the first thing to really consider and to start, if you've not done this already, you need to start doing it now, and that's plan ahead. And when I say winter, I'm talking about October to March. That's the time that you need to be planning ahead, especially in tourism. Like, your trade won't spike again now until potentially Easter. You might get a small spike for Christmas. You might get a small spike for the October half terms, which have already started in Scotland. I know they start in a couple next week for England. You're going to get a small spike of interest there. You're going to get a spike over Christmas itself, potentially. But January, February, March, they're lean months, and we need to plan ahead so that we can make sure we get through that as best we can. So planning ahead, saving money. I'm not talking about cutting wages, cutting costs, etc. I'm just saying, think about, do we need the niceties? Chatting to a client the other day, he's on about spending £1,000 on a big billboard. I just said to him, okay, devil's advocate, what's the return on investment there? Why do you need that today and not in March? What's it going to deliver over the next 3 or 4 months? And he's gone away to think about it. He's not said, oh, right, you're right. He's gone, I'll go away and think about it. And if I can justify it, I'll go with it. If I can't, I won't. So just control that savings opportunity there. Keep the cash in the bank. That's where it's strongest, and try not to spend it unless you really have to. In planning ahead, we want to be looking at targets. We want to be looking at budgets and trying to stick to them. I've been talking a lot to clients about how they're going to target their staff wages, how they're going to target their budgets targets for sales, and if they miss the target for sales, what impact that has on other budgets. And whether they're going to be able to curtail their spend elsewhere to make up for the lack of sales. But we've also spoken about, if you've achieved your sales target and you deliver more, then you shouldn't just expect the same costs. You're going to need those costs to go up, and that's fine. So we're talking about targets and budgeting and trying to stick to them where best. Don't just set them today and not look at them again until March and go, oh yeah, we did okay. Set them, look at them weekly. Are you getting close to it? Is it achievable? Is it a realistic target that you're looking at? Finding cash efficiencies, that's key as well. I'm talking to a lot of clients about their environmental stuff now. We've always spoken about environmental and the greenness that businesses can have. We had a really good Ask the Expert session a couple of weeks ago about being green and environmental as small businesses. But this is the time we see the real impact, because we're using more energy. We're using more energy to keep the shops warm, the restaurants warm, closing that door, putting a closer on the door so the door closes automatically, so that you're not letting hot air out into the world because your customers left the door open as they walked out. Stuff like that's going to really help your cash efficiencies as well. What I would say is, while you're setting your targets and you're looking at your budgets, ignore 2020. 2020 was a really odd winter because of lockdowns, etc. If you're going to be realistic and setting realistic targets, I'd be looking at 2019. I'd be looking at October, November, December, January, February, March, 2019 into 2020. If you're looking at March, maybe even look back at 2019, March 2019, to get a really good idea of what's a normal year for you. So you're setting targets and expectations based on that. We are seeing a lot of our clients actually are exceeding 2019 figures, but it's a more realistic way to look at it. And use tools to help visualize your cash flow. Use tools to help visualize your sales, etc. So one of the most popular tools we've got at the moment is QuickBooks Cashflow tool. Our clients are loving it because it demonstrates visually a line that tells you whether you're making or losing cash. and it tells you exactly when you're going to run out of money. You can set a safety barrier as well, so you can tell when you're going to dip into that. And then you can see your costs, and you can add in costs, take out costs, add in sales, take out sales, just so you can see how you're going to balance the books and the cash account and the bank account even over the coming months. So it's a fantastic tool. It's built into QuickBooks. It's free of charge with all the QuickBooks Online packages. So it's definitely worth having a play. We love letting our clients have a play with the Cashflow tool because it gives them a sense of control. And whatever they do in the Cashflow tool doesn't impact on the accounts. So we know it's a safe place for them to go and have a play and model some scenarios in there. So definitely worth having a look at that tool going forwards to help you set your targets, set your budgets, and just plan ahead for the winter ahead. So I hope that helps. It's always important to keep planning ahead, but especially over leaner months, which like winter can often be for most businesses. So yeah, I will stop rambling on for you now anyway, and I'll get some questions answered, the bit that we're all here for. So our first question in today is from Anna on Twitter DM. I have a client who's becoming increasingly unrealistic in his demands and recently is becoming quite aggressive to work with. I don't think I can maintain this relationship, but I've never fired a client before. Do you have any advice on handling this conversation? That is a good question, Anna. It's really important that all our working relationships are ones that we feel are maintainable and feasible and pleasant. If it's not working for you and you're worried about the confrontation, etc., I always say if it's not working for you, in their mind, it's probably not working for them. And actually, they'd welcome you turning around to them saying, look, this isn't working. We need to go elsewhere. If you don't want to have that conversation verbally, then have it on an email. Less personal, yes, but you can really think it out. You can write that email for a couple of days and tweak it, edit it before you send it, and then get people to proofread it. Get someone to say, does this come across too aggressive? Is this is this okay? Remember, you don't have to justify yourself as well. You could just write them an email saying, due to current demand, we're struggling to facilitate your requirements. We don't want to let you down. We feel it's best for you to find an alternative provider. We'll be stopping working with you from this date. So, it sounds that way. It's through your own success and people wanting to work with you that you can't meet his demands or her demands. And, you're looking out for their best interest because you want them to have the best experience. So yeah, if you don't want to have the verbal conversation because you're worried about going off on a tangent or getting your words muddled, write it out, write out an email, send that, because that way you can really be confident that you've got the message going across that you want to go across. And you don't have to tell them that you don't want to work with them because their demands are being unrealistic and they're aggressive. You can just say, look, we're really busy. We're having to be realistic about what we can and can't provide service-wise. We feel it's best for you to move on to find a better service provider for you who has the capacity to support you. So hopefully that helps, Anna. But it's not a nice position to be in. What I would say is once you've done it a few times, it becomes easier. It doesn't become painless, but it does become a bit easier. You grow more confident in doing it. Okay, our second question today is from Penny on Instagram DM. How do businesses write off work? Do they impact your business taxable income? I've started working for myself full time. I need to set up a home office, but I don't understand how this works financially. Okay, Penny, first of all, I'd suggest getting yourself an accountant or a bookkeeper. Find one on the QuickBooks Pro Advisor list that's near you, or find one that you've heard good things about, even if they're not near you. We support clients across the UK, Zoom, phone calls, it's all fantastic stuff. And basically just get to understand your circumstances. So Sounds like you're starting off. Depends on whether you're a limited company or a sole trader. There are variations in each process. But if you need to set up a work from home office, you can pay for that, and there's no money in the business, for example. You could pay for that yourself, and the business can pay you back at a later point. Because you're buying equipment, that's an expense. Depending on what the equipment is, it's either an expense or an asset. And that will reduce the profit, and you're always charged tax on your profit, not on your income. So a lot of people make this mistake at the very start of their business career. They think for every pound they sell, they're going to pay tax. They're not. They're going to pay tax, which on the bit that is the income minus the expenses equals profit. And you pay tax on the profit. So I hope that helps, Penny. My top advice for you would be to find someone that's willing to spend some time with you and educate you on this. There is a lot to learn as a business owner, especially around your finances. And you don't need to know the intricate details of how to run a set of accounts. But what you do need to understand is what expenses you can and can't claim, how that works, so that you've got a bit of confidence in the way your finances work. There's a lot of accounting firms out there that will have a free consultation with you and explain a lot of this to you. They've got resources they'll give to you. We certainly do. We often do like master classes and starting out classes. So we'll do both online and offline classes. People can come along to these free of charge, and there you can learn the basics of running the business finances, so they understand roughly what's going on without being swamped in all the big, heavy depreciation and amortization and stuff, all those big terms and all those complex bits of accounts. You don't need to know that from day one. You just need to know how does the ins and outs work and which part are you taxable for. So I hope that helps. Robert on Facebook Messenger. Cashflow has actually been really good for the last 6 months, and we've been able to start paying off some of the loans we took out. However, I also want to invest in the business. I think we need to have a buffer of savings though. How shall I split all these pots? So, Robert, the way I tend to work is I encourage clients to have 3 or 4 different bank accounts. Or if you're using a bank account like Starling, for example, and you can have pots of money that's protected from day-to-day spend, that's great. So we would recommend you have your normal bank account where all your ins and outs are. And then you have a VAT account if you're VATable, and you put money into that each month ready for the VAT. You have an account for corporation tax or personal tax, depending what type of business model you've got. If you've got staff, we always like to have a pot where you put in money in each day or each week for the staff wages at the end of the month. And then we have a savings pot. So we look at the bank account at the end of each week, and we know roughly how much we want in that in and out account, day-to-day expense account. If there's more than that in there, then we move the rest into the savings pot, and we build that savings pot. And at some point, we'll justify spending that money, be it on new equipment, new advertising campaign, whatever it is. We'll look at spending that money, or we can sit there and just save as an asset for the future. But it's really positive that you've had good cash flow. Just as you say, don't spend it all at once. Put it into savings if you can. There's not a huge amount of interest to be made on savings at the moment, so I wouldn't worry about trying to get it tied in. And we don't know what the next year is going to be looking like. So you could put into an instant savings account for a business. That might get a little bit of interest depending on how much money you're putting in there. If you put it into a spaces account, which is like Starling, you probably won't get any interest. But I wouldn't necessarily tie my money in at the moment to like bonds or anything like that, where I might want instant access to the money in case something goes wrong. But from that point of view, if you're not sure what you want to do with the money you're saving and where to put it, it's definitely worth having a chat with a financial advisor who can advise you in much more detail than I can there. But yeah, definitely worth having separate pots. And how you split that up is completely up to you. It's really down to you to tailor how that works for your business, because it works differently for every business, and you know what your cash flow requirements are going to be. Our next question is Hugh on Twitter DM. I have 2 part-time freelancers to help me manage a small e-commerce store. Do they need to be on payroll if they just work part-time? So there's some key words in here, Hugh. You're saying freelancers. That means they're self-employed people. They invoice you, and you in turn pay their invoices. That freelancer is then responsible for their own tax affairs. That is very, very different to an employee. An employee, whether they're full-time or part-time, would be given a contract of employment. They'd have employee rights such as holiday, sick pay. If you wanted to get rid of them, you'd have to follow appropriate grievance procedures, disciplinary procedures, redundancy procedures, etc. And then if they were classed as an employee with an employee contract, that's when they would have to go on a payroll. But if they are, as you called them here, freelancers, that means they are invoicing you, you are paying their invoice, and they are looking after their own financial affairs and their own taxes. So I hope that helps. Basically, you need to define whether they are a freelancer or if they are an employee. If they are an employee, regardless of how many hours they do or don't do, they need to be on an official payroll with HMRC. So I hope that helps. Stephanie from Facebook Messenger. I run a business where I just reached the threshold of £85,000. Congratulations. So I now need to register for VAT. How do I go about paying VAT? I do drop ships from China. Customers pay me the product. Then I go and pay the supplier from China to ship the product to the customer. Okay, Stephanie, what you need is a tool like QuickBooks. So first of all, you go to HMRC, you get registered for VAT. When you're registering for VAT, HMRC are going to ask you for some bank details so that they can set up a direct debit to collect your payments. That does work both ways. So if they owe you money, they pay it to that bank with those bank details. Otherwise, if you don't give them bank details, they'll send you a check. So first of all, get registered at HMRC. When they ask for your bank details, give them your bank details, they set up a direct debit. The beauty of that is you then get QuickBooks. You track all your sales and all your expenses through QuickBooks. QuickBooks helps you to do your VAT return. With all the complexities of various different economies, such as China and the UK and different tax codes, definitely worth getting an accountant to help you with your VAT, or a bookkeeper who's got experience with dealing with multiple country VATs, just to make sure you're allocating the right VAT on the right invoices. QuickBooks then summarizes that into a VAT return for you. Your accountant and bookkeeper will then go through and validate that, make sure it's accurate, make sure it's correct information going forwards. That gets submitted to HMRC. HMRC then collects the money due to them for VAT through the direct debit. So it's actually really simple to pay VAT. And if you've not got a direct debit, you can just go onto HMRC's website and they will give you the VAT payment details so you can make a bank transfer as well. But I think the key here for you, actually, how do I go about paying VAT? That's really simple. As long as you're using a good tool like QuickBooks and you've got an accountant or bookkeeper helping you if you're worried about getting the right VAT threshold limits and rates applied. And then, because once you've got the data right in QuickBooks and you press submit to the VAT, the rest is simple. The complex and worrying part would be which invoices are subject to VAT, which ones aren't, etc., and working that all out. So it's definitely worth getting advice from a QuickBooks advisor from the QuickBooks Pro Advisor listing for an accountant or a bookkeeper on there who's got experience with QuickBooks, VAT, and VAT with multiple nations involved. Carl from Instagram DMs asked, there's lots of different terms for things businesses should track. Oh, yes, there is. There's lots of jargon and everyone's got a different bit of terminology. What I don't understand is knowing which one is our key indicator. What would you choose out of these? Cash flow, net income, gross profit, retained earnings, equity. Okay, Carl, it really depends what your goal is. So if your goal is to make sure you've got a lot of money in the bank, then cash flow, or you're trying to make sure you cover all your bills, cash flow is your key indicator. If you're talking about sales and making sure you hit certain sales levels, you need to talk about net income. If you are looking for gross profit and how profitable is your business, you need to look at gross profit and net profit. If you're talking about the value of the business and what it's worth, you need to be looking at retained earnings and equity. So it's really, every single one of those is a key indicator. Every single one of them is important. It's working out the priorities in your own business. So for small businesses, I would normally say cash flow is your top priority. Income is your second priority because income goes into the bank and that helps the cash flow. Followed by that is your gross profit, because that tells you if you've got enough income for your expenses, and that then helps the cash flow in turn. As a small business, you probably aren't too worried about retained earnings and equity. That's at the bottom of your set of accounts each year, and it is what it is. And it will be strong if your net income, gross profit, and cash flow is strong. So that would be my priorities for a standard traditional small business: is cash flow, net income, gross profit, retained earnings, equity, because they all have a knock-on impact on each other. But that would be there's no point of having amazing equity in your business if there's no money in the bank account. The bit of equity written on a bit of paper doesn't help you. So cash flow is definitely king. But it really depends on what you're trying to achieve and strive to achieve in your business as to which key indicator works for you. There's not one that works in every scenario. So yeah, definitely worth having a chat with an accountant or a bookkeeper about that and working out quite what it is you're looking to achieve in your business. So I hope that helps. We are starting to run out of time, but I'll take the last two questions that have come in. So Finn from Twitter DM, how should we be tracking and rectifying variable costs? So Finn, if it's a variable cost, it's a cost of sales in terminology for QuickBooks. So I would be putting all my variable costs, such as materials, cost of labor, etc., into a cost of sales category on QuickBooks. And I would be tracking it through that. And then I can see if my cost of sales are going up or down. Another thing you could use in QuickBooks is if you're doing projects, use the project tool in QuickBooks and you can track the expense and the income per project so you can see how profitable each project was. Because ultimately that's why you're tracking variable costs, is so you can see if your variable costs are going up, do you need to put your income costs, your sales costs up, so the amount you're charging the customer. So I hope that helps, Finn. Malika on Facebook Messenger, what do you do if you forget something from your inventory in one of your statements, but remember the following years? How do you account for it appearing when it wasn't purchased in the accounting period? You can do a prior year adjustment. So definitely worth having a chat with an accountant to make sure that the person that's going to answer this understands the full scenario. But I'm going to go on the assumption you've missed £1,000 worth of stock from your stock take last year. That adjustment can be put through in the accounts the next year through a prior year adjustment or a journal to journal it into the right places. But it's one of those that I need to know the full history of the problem and what the objective of the solution is before I can give you a solution to it. So yeah, definitely worth having a chat with your accountant about that. Okay, so we are running out of time for today. The poll we asked was, do you have a cash flow plan? 30% of you said yes, 40% of you said no, 30% of you said sort of. For those that have said yes and sort of, fantastic. Keep working on it, keep it up to date. There's no point of doing it, letting it and leaving it to one side and forgetting about it. You want a constant live cash flow plan. And that's the beauty of the QuickBooks cash flow tool, is it's linked to your bank account. It's live on a daily basis. Those that you said no, it's definitely worth looking into, definitely worth an hour or two of your time, one evening sat there just playing with the QuickBooks cash flow tool, because it's really insightful information that you can get. So definitely worth having a look at. So thank you all for tuning in today. If you want to get in contact with me, you can send me a message on LinkedIn or Facebook. Just search Johann Goree and you will find me. Coming up on Ask the Expert tomorrow is Tommy Eaton, co-founder of Bamboo Brush, who are on a mission to eradicate low-grade single-use plastics. They have had a QuickBooks video released yesterday. Absolutely brilliant insight to their business and the benefits of their business on the economy, on the environment. Definitely worth having a look at on the Facebook page or on YouTube if you've got 2 minutes. So tune in to find out if your business can set net zero carbon emission goals and meet them. A reminder that if you need any more advice, then join the official Intuit QuickBooks SMB community group on Facebook. There's accountants and business experts such as myself on there 24/7 answering your questions. I've really enjoyed answering your questions this morning. I hope they've been insightful answers and it's helped somewhat, or at least given you a right direction to move into. As I say, a lot of the questions always advise you go and talk to an accountant or bookkeeper to get the full scenario explained. There's a lot more detail behind everything than what a short message on social media can do sometimes. So thank you very much. I hope you all have a great day.